And joining us right now is Barrick's CEO, Mark Bristow. Good morning to you.
Morning, Andrew. How are you?
I'm good. Thank you for joining us. Before we even just get into the numbers, just give us a little bit about what the experience has been like, what you've been able to do, what you've not been able to do during this pandemic.
Well, it's unprecedented, as we hear from everyone. But I think that the team has done an amazing job. As you know, we merged Randgold and Barrick last year. This time, 1st of January last year, we set out to build a different-looking company, flatten the management, make it more accountable at the site, and that put us in good stead to be able to manage this crisis on the ground. And of course, coming from Africa, we're quite used to pandemics and managing particularly viral pandemics, and so we were quick out the blocks, focus on our people and our community, and also manage this crisis. I think that's the big thing. Like any crisis, it's how you manage it that's so important.
So one of the things you've done, though, is you bought what I was reading in the Financial Times, 800,000 antibody test kits. Have you gotten them already? Are you distributing those yet?
Yes, we've rolled out the first lot in Dominican Republic. We have a partnership with the mining industry, with Argentina, and of course across Africa. We're still struggling to get the accreditation from some of the authorities in North America.
And what's it been like in terms of employees coming to work, not coming to work? What other types of testing are you doing, not doing? What does it do to your quote-unquote supply chain?
So, we grew up with the two bouts of Ebola, 2013 and more recently in the DRC. And the key thing about any viral crisis is to screen, identify, isolate, test. And so that's what we put in place across Barrick's organizations, 14 different mines around the world, early on in February already. And it's really that focus, most importantly, to screen, temperature screening, and also questionnaires, understanding where people are, how they feel. If there's any sign of symptoms, isolate, and then trace all the contacts, isolate that. So we've reached a peak now in all our isolation, particularly in Nevada, and we're starting to see the number of people in isolation. We actually had a meeting last night. We went up to about 58 people, and now we've brought it back down. 85% of those are back at work. And it's about really managing the situation on a minute-by-minute basis.
So what do you make of the increase in the price of gold itself over these past couple of months as a result of this pandemic and of all of the money printing that's going on, not just here in the United States, but around the world?
So we saw that leading up to the 2008 crisis, and then beyond that. And then, I think the world has quickly reverted to quantitative easing, managing a series of crises between the 2008 financial crisis and today. And of course, with the response to the COVID-19, as you point out, we've taken that quantitative easing to a different level. And of course, that puts pressure on paper money, and you measure that with the price of gold. And you've seen the price of gold go up in all currencies across the globe in recent times.
And so, but is your expectation that that's a temporary phenomenon? Do you believe that this is going to be a long-term phenomenon? We've had people like Ray Dalio come on and say that, over the next decade, given the amount of printing that's going to happen, the value of a paper dollar by default is going to go down, and people are going to look for safe havens like gold.
Yes, and I think we've seen that very big change in the gold price in dollar terms and other currencies post the turn of the century. And again, it's how does this economy come back to where it was? And that's always a difficult, that's really the challenge, is how are we going to get back to a better situation? And how do you get back the money supply that's been pumped into the economy now? And that all drives the gold price. On top of that, there's a technical aberration as well, because new gold supply is predicted to continue to decline. So gold supply, a technical support for gold price, is also adding to the sort of underpinning the gold price going forward.
Hey, Mark, that's an old story, obviously, the printing. And I'm just wondering what happened 8-9 years ago. When were we close to 2000? We almost got to 2000. And then, in the face of unprecedented QE infinity that we went through, and staying at, the Fed staying, at very low levels, and central bankers around the world going negative, we've had that environment for 7, 8, 9 years. And gold was all the way up where, everyone was forecasting it was going to go through 2000, and all the usual suspects are talking about $5,000 and $10,000 gold. And with all that printing and all that central bank action, we never got back through 2000. And all you see the big saucer bottom. Why didn't it happen then?
So, Joe, if you look at that graph you've got on the slide, you've seen a shift in the base of the gold price, and certainly we saw, the added demand from China drove that initial gold price post 2005 as we came out of the hedging crisis. And then, of course, the mining industry itself added a whole lot of supply on the back of that rising gold price, and in fact, in the process, destroyed a lot of value, and a lot of people that owned gold stocks at that time didn't get the benefit of it. This is different because during that trough that you talk about, we've learned a little bit of discipline in our gold industry, and we've focused more on ensuring that you have that insurance and that you got the tension to be able to deliver that insurance policy, given the unprecedented times that we've experienced in the last couple of weeks.
Mark, that looks like, Chartists are one thing, but that's a long base to make, and it looks like a new level, like you said, where this is probably the low for who knows, but for the future. And it looks like from where it is, it could go anywhere, through 2,000, through 3,000 at this point, from just looking at the long-term base that it made, that saucer bottom. That must be pretty bullish, Andrew.
So for Barrick, we allocate capital at $1,200, so it's a very good position to be in right now.
Looks like it had a long time to consolidate and build a base and head higher. Andrew.
Well, that's what I was going to ask you, Mark. Given that the price has moved higher, your base cost, I believe, as you just said, was $1,200. Do you anticipate more people now jumping in, and what does that do? This is sort of similar to the oil story to some degree.
Yes, but the difference is we don't have reserves in our industry, and we've been constantly exploiting lower and lower quality gold resources as the gold price has gone up, and we are not prepared as an industry for this extra demand. Barrick is a different business, as you know. You hosted some of our deals last year, where we look to really consolidate and build a quality base to our business. And so we have a 10-year plan at $1,200 gold. And, this situation is what we are all about, giving our investors an opportunity to have a self-funded insurance policy against a global financial crisis. By the way, people were talking about this before COVID-19 arrived on the scene. Everyone was worried about whether we were closer to the top than sort of further back down. Everyone liked, and as you know, big bull markets, everyone never looks at the bottom or the turn. And what we got from COVID is a push over the edge.